Hello and welcome to Business Arena on TVP World. I'm your host, Marie Cato. Join me for the latest business headlines of the day. The Polish government today unveiled an ambitious strategy aimed at securing economic growth. Its elements: record-breaking investments, energy transformation, and technological advancements. We now take you to the Warsaw Stock Exchange, where our reporter Aleksandra Marchewicz brings you the key takeaways from today's announcement.
We are at a Warsaw Stock Exchange where Polish Prime Minister Donald Tusk has just outlined a historic plan for Poland's economic future. He called it a year of Poland's economic breakthrough, and the numbers speak for themselves. Investment in 2025 is expected to exceed 155 billion euro, with Polish Prime Minister emphasizing that the real figure could be even higher.
This is a cautious estimate. Today, I could say it will be closer to 166 billion rather than 155. This is a record amount, one never seen before in the history of the Polish economy.
The key theme, to quote, investment, investment and more investment. Now, the government's plan is to build around 6 pillars, focusing on Poland's high long-term economic strength. From boosting R&D and energy transformation to accelerating AI innovation, infrastructure development and capital market expansion, the plan also includes business incentives and tax relief to create a more dynamic and investment-friendly economy. This long-term plan is supposed to attract foreign investments to Poland, and we asked Polish Finance Minister about it, and he mentioned that there is a reason for it.
I am really proud that Polish economy is really accelerating. Right now, we expect the Polish economy to grow by roughly close to 4% this year. So Poland will be among the fastest growing economies in the world.
The government's vision is simple now: massive investments, a stronger economy and global competitiveness. And to bring you some key numbers which will make it clearer for you: 43 billion euro for rail modernization and 50 billion euro for energy infrastructure. Those are not small numbers, and definitely Polish government is not stopping there. As we know today that the VAT exemption now increased to 57,000 euro, which, mind you, is crucial for development of small businesses here in Poland, so definitely changes are on the way. To sum up, Poland is in a period of economic expansion, but as Polish Prime Minister emphasized, global competition waits for no one. From Warsaw Stock Exchange for TVP World, Aleksandra Marchewicz.
And following up on that news report from Aleksandra Marchewicz at the Warsaw Stock Exchange, we'll take a more detailed look at the investment plans delivered today by Poland's Prime Minister Donald Tusk and Finance Minister Andrzej Domański via the 6-pillar strategy. The overarching vision of this year is that 2025 is Poland's year of breakthrough and investment. Stick around for the bottom line to find out more. More than 60 major European companies have come together to form the EU AI Champions Initiative. It aims to position the EU as a leader in artificial intelligence development. Announced at the AI Action Summit in Paris, the initiative's goal is to integrate artificial intelligence across key sectors, including healthcare, energy, defense, and manufacturing. The group, which includes giants such as L'Oreal, Spotify, Siemens, and Airbus, has secured 150 billion euros in investor funding over the next 5 years. The initiative comes amid a global push to pioneer AI development. While the EU lags behind global powerhouses like the US and China, industry leaders believe the bloc has the potential to rise to the forefront alongside these global giants. To achieve this, they are calling for changes to streamline regulations, boost investment initiatives, and establish data-sharing frameworks to enhance global competitiveness. Ukraine has increased its imports of natural gas from the EU after Russian airstrikes damaged the country's energy infrastructure. These higher imports come as the price of natural gas has surged to a 2-year high.
Ukraine's energy infrastructure has become a primary target of Russian airstrikes. As a result, Naftogaz, the Ukrainian state-owned energy giant, has lost a third of its production output. While the company has said its operations continue uninterrupted, it is reportedly in the market for an additional 1 billion cubic meters of EU gas to boost supply. While this accounts for a fraction of the EU market's demand, it comes amidst a market crunch. after the expiry of the Ukrainian gas transit agreement. Natural gas prices on the EU market continue to rise. Currently, they stand at €58 per megawatt hour, marking the highest level in 2 years. European gas storage facilities are now less than half full, which is some 8 percentage points lower than the usual average at this time of year.
Tariffs. That's the word of the day across the globe again, as Donald Trump announced on Sunday his plan to impose a 25% tariff on both steel and aluminium ahead to the U.S. This time, thankfully, neither Poland nor its peers in Central and Eastern Europe are likely to be affected.
Like many other announcements from the White House in recent weeks, this too has come as a bit of a surprise. Trump revealed the plan during a previously unannounced press conference aboard Air Force One, en route from Florida to New Orleans for the Super Bowl.
Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum too.
10%?
25%.
25 for aluminum as well?
25 for both.
So who's shaking in their boots this time? Well, according to data from TradeIMEX, America's largest sources of steel imports are Canada, Brazil, and Mexico. Here in Europe, Germany and the Netherlands will be most affected. So how's the Polish industry reacting to Donald Trump's plans?
As trade unionists working in Polish steel plants, we're not currently concerned about the effects of enormous tariffs the Americans are going to impose.
Poland's steel mills, like those of its peers in the CEE, are connected to internal and EU supply chains. An almost insignificant share makes it out of Europe. What Mr. Grzybek does worry about, however, are the tariffs proposed on finished goods and on the auto sector in particular. Poland, along with the Czech Republic, Slovakia, and Hungary, are powerhouses when it comes to semi-finished products like transmissions, engines, and other components that go to German giants like Volkswagen, Mercedes, and Opel.
Now, if we sit down to negotiate with employers, they emphasise that it's going to be quite a difficult year for the automobile sector because of the fact that all these budget results are simply 20% lower. So we're a little worried about that.
Grzybek also points out that while Poland's steel mills produce somewhere between 6.5 to 7 million tons of steel per year, its consumption is at around 12 to 12.5 million, making Poland a significant importer. Why is this? Well, he brings it down to the cost of CO2 emissions in Europe. Being a CO2-intensive industry, it just cannot compete on price with producers in countries that don't impose emissions quotas.
Perhaps that is also why the US president is introducing tariffs, because America may be having similar problems.
More details on these and other bilateral tariffs are expected on Tuesday or Wednesday.
And that's all for our business news updates today. For more business stories, check out tvpworld.com.